What's up guys, this is Adobe. Welcome to your Penny Matters. Today we'll discuss why you need a stock trading account, how easy it is to open one, and a fundamental guide on how to go about investing. Now I believe we are working for money. We all do, it's natural, money is what keeps everything going. So it's only fair that our money works for us as well. Saving for a dream gadget, a car, or vacation is something we're accustomed to, but we're not saving every month to invest, are we? So why not save a little to invest every month? Savings are important and it does go a long way. But with interest rates at rock bottom in today's economy, we should be looking at investing in something that provides a higher rate of return. Now, real estate is a good bet, but not everybody has enormous liquid cash required for investing in real estate. So why not look at the best bet, which is stock markets? Now, there's always an element of risk associated with investing in the stock market. But if you are diversifying your investment portfolio every month and investing consistently, you are sure to reap a better return for your investment than any savings account. Now, that being said, I always advise keeping a certain percentage aside for an emergency fund. My personal goal is 15% of my net income for an emergency fund and another 15% towards investing. Now, I might dip into my emergency fund occasionally for a short vacation or a one-time purchase. I'm not perfect. I'm not claiming to be, but I always make sure to pay it back as soon as I can because it's something for myself. An emergency fund is something that is going to benefit me in case of an emergency. So I always make sure that I don't actually cheat myself. I pay it back as soon as I can. And this is not generally advisable, but hey, I'm being realistic here. So let's look at the advantages of having a stock market trading account. Number one, convenience. It's easy to invest in the stock market and buying and selling can be done on almost all mobile devices with the click of a few buttons. Number two, it's liquidity. Now, this is one of the most important advantages of investing in the stock market. Your stocks can be sold at any point in time and you can decide when to enter and when to exit the stock market as you feel is needed. Number three, potential higher rate of investment. Now, the stock market is a high volatile organism. Now, there are ups and downs on a minute-by-minute basis, but a proven winning formula is to invest long-term and by diversifying your investment portfolio every month and consistently. So if you invest every month and consistently and diversify your portfolio, you're pretty much guaranteed to earn a good return. Now, I'll show you guys how easy it is to open an investment account. So there are many stock trading apps that you can use. I personally use TD Direct Investing Account. So this has worked flawlessly for me and it has a mobile app that is integrated directly into my TD account as well. Now the procedure to open an account is fairly simple and ideally can be done online. But if you do face issues like I did once to open an account for my wife, it's fairly simple as well. Now we wanted to open an investment account when the stock market had crashed during 2020 for my wife, but we tried to open one online and we could not. So it was an issue with TD and we had to go to the bank physically. Now, thankfully, it was done safely and with social distancing, and we were able to open an account in less than 15 minutes with all the paperwork signed and dated. So the account was fully functional in just under 24 hours. So it might take up to 48 hours depending on how many applicants there are and how fast the branch is working. Now, when you're opening the TD Direct Investing account, you'll be asked what kind of account you need. Now, there are many kinds of accounts offered. I will touch on mainly 4 kinds of accounts to not make the video too long as it's mainly for beginners. Number 1, cash accounts. So you can basically transfer money from your savings account or checking account into any one of these cash accounts and start trading immediately. For absolute beginners, cash account is what I would suggest. You put down your own cash and you buy and sell stocks. Let's say, for example, you put $500 and you wanted to buy a couple of shares of Facebook. In the future, it becomes, let's say, $1,000. You need to pay taxes on the capital gain. That is the profit earned on the money invested. Now, the second kind of account is a tax-free savings account or a TFSA account. Now, what this allows you is to grow your money tax-free. For example, you invest $500. We'll be taking the same example of Facebook, and the price of Facebook goes up in value. Now, let's say your $500 becomes $1,000. You don't have to pay taxes on the capital gain or the profit you made in a TFSA account. Now, the third kind of account is an RRSP account or a registered retirement savings plan account. Now, this account lets you grow your money by deferring your taxes on the investment made. Let's say, for example, we'll take the same example again. You invest $500 and buy shares of Facebook. and the price of Facebook shares go up in value, and now your 500 becomes $1,000. You don't have to pay taxes until you withdraw the amount. So basically, you will have the money there, but you won't have to pay taxes until the day you actually withdraw the money. So it's important to understand this. Contributing to an RRSP offers a tax deduction in the form of reducing your net income or net taxable income. Whereas contributing to the TFSA does not provide a tax deduction for that year, but it does not tax the capital gain, aka the profit that you made. Now, the last account type is a margin account. It essentially allows you to invest money that is loaned to you with a certain interest rate to buy shares. Now, the reason I won't recommend this for beginners is because for example, you might need to only pay $250 for the same Facebook shares that cost you $500. But if you lose money and the value of Facebook shares becomes $0, you will not only have lost your $500, but you would need to pay back the interest rate on top of the money you lost. Now, margin account is great if you want to invest once you gain experience in trading, and I would recommend it to only advanced investors. We're over here at the website of TD Direct Investing, and you can click on open an account. It's pretty simple and straightforward here, and you would see your options, which are margin account, which I advised would be for experienced traders so that they can unlock the true potential ideally, which is right. So you have your cash account, you have a self-directed TFSA or tax-free savings account, as well as self-directed retirement registered retirement savings plan account. So self-directed means you're the person who's investing directly. You're not investing through a third-party person, be it an advisor or an accountant or somebody else. So you're just doing the investments yourself. So that's basically it. You can choose to have multiple accounts when you open one. So you can have a cash account along with a self-directed TFSA account, as well as a retirement savings account. So I opened mine, for example, with cash, a self-directed TFSA, as well as a retirement savings plan account. So all of these do come with the same cost. So there's no additional cost for opening, let's say, a cash account along with this. It doesn't cost you more. So you can choose multiple options. So I would advise you just to start off with cash. You can choose to have TFSA and RRSP as well. Both of these are great options. I do not recommend any others as of now unless you specifically have a need or a requirement for these. Then you should definitely look into all of the other options as well. So you can choose, for example, one of these. Let's say you want a TFSA, you can click on apply, or you can click on to the details. So if you want to apply, you can sign in using your TD account, or you don't have one, you can just start an application. If you already have one, it makes it a lot easier. Otherwise, you can just go ahead and add. As I mentioned, you can add multiple accounts. So let's add a TFSA, an RRSP, and a cash account. And you don't want to be starting off with, when you're just starting off in investing, I definitely don't recommend going into options and short selling. So we will ignore that for now. So what you'll need handy to open your account. So you will need a government issued ID. If it depends on which country you are in. If you're in Canada, you need to be a Canadian resident. You need to have a social insurance number, a bank account number. A sweet and savory snack, and they're being funny, but yes, it might take a bit, like 5 minutes at least. So yeah, you can yada yada yada, and you start, and there you go. So you just apply, type in all of the details over here, and you should be good to go. So if this does not work, sometimes it doesn't, as I explained in the video, you can go ahead and go to the local branch and open it. It takes about roughly 10 minutes to go through the paperwork and sign the documents, and you should be up and running within, I believe, 24 hours. Sometimes it might take a bit more depending on how many applications are there during that particular week, and if it's a weekend, and how fast the branch usually works. But once you have this done, it's pretty fast and you should be up and running, and it's pretty straightforward. You can just directly go into the app and start trading, or you can just log in using the TD Direct Investing website and start trading there. So now, as I mentioned before, I invest around 15% of my income every month. Now, I'm not a financial advisor, I'm just a random guy on YouTube. But any investments you make are your own decisions. That being said, for beginners, investing in stocks and stock indexes like Vanguard index funds is a good option in the long run. Now, this is what I call hands-off investing. You don't need to keep looking at the stock market every day and wonder what's going to happen. Keep goals to yourself. Let it be a time frame. Let's say like I'll withdraw my investments in 5 years, or I'll withdraw at whatever the market price at that time in 5 years is. So keep a deadline, or you can keep a price ceiling. Like let's say you bought shares of Facebook for $500 and you plan on withdrawing at $1,000 per share. So you will not be withdrawing until that price is hit. Let's say it hits the price in 1 year. You can withdraw it, or stick to that timeline where you said, I'll only withdraw it after 5 years. So stick by whatever rules you have set. So thank you so much for watching, guys. Stay safe. Do comment and ask me questions if you have any. Hit that like button and subscribe because your penny matters.